Do you dream of the day an unexpected bill pops up and you just pay it? There's no worry about where you're going to get the money from or which card you can try and put it on. It's inconvenient, but you pay it and move on with your life. If that's something you want, then financial freedom is what you need. In this video, we're going to talk about how you can achieve it. But first, we must talk about what financial freedom is and what it isn't. Simply put, financial freedom means being in control of your financial life instead of it being in control of you. It means saying yes to a long weekend vacay your best friend popped on you because you've got a vacation fund you've been slipping money into every paycheck. It means you can decide that you're done trying to patch that old junk car and you can head to the dealership and buy one a little newer with less headaches. It's living a life of options. What financial freedom isn't is a get-rich-quick scheme. Building wealth takes hard work, sacrifice, and time. But once you've got your mind wrapped around that, then achieving financial freedom is possible. Know where your money is going. Look, there's no way around it. If you want to save and invest, to buy a house, or even retire early, you need money. The best way to make and keep money is to understand how you're earning and where you're spending it. This is where a budget comes in. Now don't be afraid. For many people, a budget is akin to handcuffs, stopping us from getting what we want. But it's actually the opposite. A budget can help you understand how to get what you want. If you understand where your money is going, then you're better prepared to make decisions. No athlete wins a championship by accident, so don't expect that you'll just luck into becoming financially free. Prepare for your rainy days. Did you know that around 60% of Americans cannot handle a $1,000 emergency expense? The one thing about life is that it is unpredictable. There will be an emergency that requires your attention. Why not prepare financially for it? Having an emergency fund allows you financial flexibility along your wealth building journey. Typically advised to be about 3 to 6 months worth of expenses, your rainy day fund is there to help you out when your hot water heater decides it's time to go, or your left knee tweaks during a weekend game of basketball and now you need an MRI. This is a core pillar of achieving financial freedom. If you protect yourself against unexpected expenses, you won't derail your long-term goals and plans. Debt is a terrible mistress. The biggest killer of wealth is debt. Borrowing from your future self to afford things in your present should only be used for the largest of purchases. For example, a home. All other forms of debt should be avoided. Debt ties up your money and disallows you from using it to your greatest advantage. Work to pay off those high interest debts, particularly those credit card debts. It's a guaranteed return on investment when you do. There are typically two main ways to pay off debt. There's the debt snowball method, also known as the Dave Ramsey method. This is where you lay out all your debts from smallest to largest. Disregarding interest rates, you simply pay minimums on all but the smallest debt. On that one, you throw every available dollar. As you free up more and more money by eliminating the smallest debts, you can then throw more money at the next largest debt until all debts are paid off. On the other side is the debt avalanche method. This is where you lay out your debts by largest interest rate to smallest, then pay off the largest first. In this method, you'll technically pay off the debt with the least amount of additional money owed. Whichever method you choose, understand that the road to financial freedom is structurally sound because you have no debt and have an emergency fund. Meet the match or max. Even if investing is not your passion, you must understand the basics of it because the next step to financial freedom embraces it. If you work at a company that has an employer-sponsored retirement plan, typically known as a 401k, a 403b, or a thrift savings plan, then you want to be putting money into it. And if your company offers a match, then you want to meet the match. For example, let's say your company offers a 50% match on the first 5% contributed. Then you want to ensure you're contributing at least 5% to get the full match. That's additional funds being put into your account simply by meeting the match. A second type of account that you should be maxing out as soon as you can is called an individual retirement account or an IRA. This is not employer-sponsored. Instead, this is handled by you. And every year, the government tells you how much you're allowed to put into the account on an annual basis. For example, as of 2024, we're allowed to contribute $7,500. This money can be put in a traditional or pre-tax account or post-tax, otherwise known as a Roth account. Meeting the employer match and maxing out your IRA yearly are two simple ways to start thinking about your future and building a strong financial freedom base. Set realistic financial goals. So you're staying on track with your spending because of your budget. You've got your rainy day savings completely funded, you're out of debt, and you're saving for your future self. Amazing job! Now you get to think about what you truly want in life and how to actually get it. This is where setting realistic financial goals comes into play. This is the step where you determine what you actually want out of your life. Do you want to buy a house or pay for your kids' college? Are you keen on retiring early and living a simpler life out of the city? Having a clearer, more realistic goal about what you want your money to do is a smart financial play. So grab a pen and some paper and start writing down your financial goals. As you do, make them specific, measurable, achievable, relevant, and time-bound. In other words, make them smart. Let's look at an example. Saying, I want to save more money isn't a very good goal. But saying, I want to save $50,000 over the next 5 years is a great goal. This means that you must save $10,000 each year, or about $835 per month. So we have a specific goal that we can measure. We can see it's achievable, it's relevant to us, and it has a time frame. These 5 steps to achieving financial freedom aren't a secret. And if you want financial freedom, you'll be happy to know they aren't impossible to achieve, but they will take some discipline. How quickly you achieve financial freedom is entirely up to you and depends on a few factors. Living below your means. Wealth is built on the gap. The gap is the difference between what you make and what you spend. The more you have, the greater the gap, the greater the opportunity for you to save and invest. Now, this concept may sound simple, but many people miss the mark. But it's important. To achieve financial freedom, you need money. Again, it sounds simple, but many of us are living a life on debt. Not only do we not have money right now, we're robbing our future selves of money as well. Get a handle on that budget and work to decrease as much of your expenses as possible. Paying yourself first. Paying yourself first is a simple premise. It means that before you do anything else with your money, before you spend a single penny, you put a specific amount of money into your savings or investment accounts first. You treat yourself as your most important bill and ensure that whatever happens, you put money away for you before you pay anyone else. One of the easiest ways to do this is by automating your finances. Set up a separate savings account at another bank or credit union. Then every paycheck that comes in, have a portion of the money automatically taken out and put into that other account. Or have a portion of your paycheck put into your IRA or brokerage account. By making it automatic, you remove discipline from the equation. It just happens like clockwork. Increase your income. This is the best part to building wealth and achieving financial freedom. You see, you can only cut so much. There's a lower limit to how much you can cut out of your budget. You still need to eat, drive to work, or take care of the kids. But there's no limit to how much money you can make. It is your greatest ability throughout this journey. Finding ways to increase your income, whether through a better day job, freelancing, or simply picking up side gigs, gives you greater flexibility. More money means being able to pay off debt faster, build up your emergency fund quicker, and then invest more aggressively. Financial freedom is simple, but it's not easy. As you mature in life, there's partners, children, graduations, weddings, and taking care of aging parents. Any of these could derail your financial life, but if you set goals, give yourself a buffer with an emergency fund, get and stay out of debt, and then save and invest aggressively, you can live a life free from financial worry and anxiety. Thanks so much for watching. We hope you learned something new today. If you enjoyed the video, share it with a friend, and we'll see you in the next one.